Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Welcome everybody back to another episode of the Apartment Guys podcast. And today's a super fun episode for all of us. We have power couple number one in the house, multifamily mavens, Michael Barnhart and Suzy Sevier with us. They are joining us from Great Britain, the Isles of Great Britain, but are actually from the United States and invest in the United States. And so we get to hang out with them a bit today. Guys, thank you so much for being here. I'm really glad to have you.
Absolutely, Tate. It's a pleasure being on, and we love your podcast, and we're excited to provide value to your listeners as well.
Oh, I appreciate that. No, you guys have kind of become celebrities here recently and been on Michael Blanc's podcast and a few others. So it's an honor to welcome you onto the Apartment Guys. And today we're the Apartment Guys and Apartment Gals. I must disclose or disclaim properly there. Real quick, Suzy Sevier and Michael Barnhart are the founders of Adventurous Real Estate Investors. Their adventure began at a TEDx event, and the theme was reset, and it changed their lives. They took the event to heart and used that theme as a launching point to regain control of their lives, secure financial freedom, give back to the community, and discover their big why, quote unquote, why. They want to share this journey by helping others check off their bucket list items and achieve their greatest ROI, which is return on impact. Guys, I love that. That's an awesome concept in and of itself. Let's start right there. So tell me about the TEDx event.
Yeah, I'd love to. So the TEDx event was like an all-day event, and it had 8 different speakers. And then in between speakers, there were like little exhibitions that you could do just like keep you like involved with the whole entire day and the whole entire event. And the main theme was reset. But with that, it was like they would talk about topics and then talk about a different way to look at them, you know? So even when it came to like tattoos or being in the church or like the death sentence or solitary confinement or like beatboxing, like they presented it in a different light. And like from there, Michael and I, like after the event, we were really just like, wow, you know, like there's so many things that you can, if you literally just do that mindset shift, like, you know, 180, it completely changes the way you look at things. Like not everything, everything has 2 sides to a story. It's just actually looking for that second side and taking it in for what it is.
Mm-hmm.
Right. And just to piggyback off of that, you know, there's 2 kinds of ways to look at it. There's like the perceiving eye and the observing eye, right? So everything that we've experienced in life leads us through seeing things through a perceiving eye, when we actually want to be more non-judgmental and see things through an observing eye. That makes sense.
I love that. So you guys are speaking my language already. I've talked about meditation a few times on the podcast in the past, and for me, it's a daily practice that most days happens anyway, and is really meaningful to me. And it's really does come down to practicing, in the words of a lot of teachers, just being the observer, right? Like being the non-judgmental observer of your thoughts, of whatever is going on in your immediate surroundings, the sounds, the temperature, whatever, and being in a place of like acceptance and, you know, kind of surrender is another word that you hear people use in that space a lot. And that to me is such a cool distinction to get to, you know, to get to know and practice in life, because it gives you a lot of freedom around different problems and situations and, you know, things that you need, business things that need to be solved, and, brainstorming and all that stuff benefits, right?
Yeah, and that's great. And even to add to that, like my favorite part is that in meditation, you really are in the moment, right? Because like you're not supposed to think about the past thoughts because we can't change them. And the whole point is not to think about the future as well, right? It's supposed to like get those thoughts out because you can't control the future and we don't even know what's happened yet. So to allow yourself that freedom to just think in the moment is truly like the most powerful part.
Yeah. That's awesome. Super powerful. I love that word too. Awesome. So how did this all affect your trajectory in your professional world and in business?
So for me, I don't know if I actually figured it out right away, right? Because like at the time I was still in a W-2, like I was almost done with my MBA. Michael was getting ready to move over to the UK and he was moving before me. But I think all of the events that happened up until me moving, like once that happened, that's what made me realize it all, right? It was like, okay, this is where I need to reset. Like, this is where I need to start thinking differently. And like, even upon moving here, like our whole idea was we need to be able to travel and explore as much of this world as we can while we're over here. Like there's so much that we don't know. And that goes along with reset, right? Like to go back to that, there is so much all of us don't know. And to be able to like experience it all, like all the different cultures, all the diversity, like I just think that's huge. But then too, when it came to COVID-19 and all the lockdowns, like we had to do a reset there. Like for the first 100 days, because that's how long the first lockdown was, like we don't have a TV and we were like, okay, what are we going to do? Right? Like another reset shift. Like, are we going to let this moment like tear us down, or are we going to let it bring us up? And that's how this all led us to real estate investing, because of one book, because Michael and I did like a mini book club together. And that's where we just looked at each other and gave ourselves permission to be able to do this from overseas. Because when everything went virtual, that was our in, like meeting people, networking, meetups, conferences, all of it. It was just literally telling ourselves like, we can't wait now, or we can't wait later if we want to be able to achieve everything we want to achieve now. And so that was just like the greatest part of it all.
That's awesome. So, and then how did multifamily investing come into the picture? How and when did that all morph into existence?
So as we were educating ourselves more and more about real estate, there's a lot of information out there about single family, and single family, it just requires us to take down a single family home or something like that. And there's a lot of information out there. It's like take action, take action, take action. And so we initially had thought, okay, single family is like the way to go. Like, and then eventually, we'll accumulate like 25 single family homes, and then eventually, 1031 those into a large multifamily like 5 years after that. Like that was our initial plan. And so we had like set up a team in Cedar Rapids, Iowa, to do this and to do some single family purchases and renovate them and then rent them out and things like that. And we had 2 doors under contract, and a inland hurricane actually came through. They took out 60% of the trees. People were out of power for like weeks. And needless to say, all the contractors weren't worrying about doing rehabs on rental properties. They were rebuilding the city. So our financing fell through on that. And so those 2 properties fell out of escrow. However, that was another, blessing in disguise for us, because that made us take a step back. And we looked at our 5-year goals. Again, we weren't hindered, just like we weren't hindered because of COVID. We weren't hindered again, like, oh, well, we'll just wait until later. And they're like, no, we're moving forward, and we have a lot of grit and a lot of determination. And so I think that's what, helps us be successful. But with that, we took a step back and we looked at our 5-year goals. Our 5-year goal is to get into multifamily. And we said, let's do this now. And so we started networking and then just meeting as many people as we can and just, Zoom calls here and there, like 25 plus a week, just to talk to as many people as we can and get ourselves known out there. Because we knew that the one thing that we needed to take advantage of, like Suzy mentioned earlier, was the opportunity that virtual meetings, we need to take advantage of the virtual meetings that were happening now, right, during COVID. Yeah. Since everybody was, getting on virtual meetings and conferences were going virtual and things like that. And so we knew that we needed to take advantage of it now during the COVID period, and we did.
So you guys went into heavy networking mode, heavy. And this, I guess this is more of a question than a statement, but you went into networking mode. I know that because that's how I know you guys and how a lot of other people know you as well. But did you also like launch a deal finding machine and a capital raising machine all at the same time? Because those are like two very different things, and they're also different than networking, right? So like that, as a fellow multifamily syndicator, I know these balls you got to get in the air. And how did that all come to be?
Yeah, that's a great question. So because there's two of us, it worked out really well, right? So like we delegated the tasks right from the beginning. So like Michael did the acquisitions and the broker relations, and I did all the investor relations and the marketing. And thankfully, we would then come together to do the networking because that's who people recognize us as, right? Like as Suzy and Michael together on the same screen. But so it was like that really great balance of like Michael working on the acquisition side, me working on and meeting more investors, and just bringing that all together every day. And one thing that we do is that like in the morning, we like write down the things that we need to get done. And then at night, we look over them to be like, okay, did we complete those items? Like if not, what has to move to the next day, like talk through it. So then there was always accountability in making sure that we were like becoming 1% better every day.
Mm-hmm.
Yeah. And so what she's talking about in the morning too, like a lot of businesses, sometimes some businesses will have like a morning sync or like a weekly sync or something like that. Suzy and I do that on a daily basis.
Mm-hmm.
We write down, okay, these are things that we need to do. And then we share them with each other. And then we make sure that they're both aligning together and we're progressing the business forward, to make sure that, keep each other accountable, make sure not going off on any tangents or anything like that, mm-hmm. which has been proved very, very valuable for our business.
It's such a rare gift in business in general to have a great partner in that you get to work with. I am lucky enough to have one, and I don't take it for granted. And even my partner, as great as he is, he and we've worked through a lot of stuff over the course of a lot of years working together. And so I can't imagine being married to him. For a few reasons, but I mean, it is really quite a different sort of thing to imagine being married to your business partner / accountability partner. You guys, what you just talked about, and have that all work. And the psych major in me wants to ask you all about how you guys navigate all of that, but I actually also really want to hear about your first deal, because that is a huge thing. And but before we get into that, since I brought it up, do you have any secrets for? I won't put the pressure on in terms of like married business partners, but even just business partners in general. Like, what is it about the two of you? I mean, you're adorable together. You obviously have great chemistry. You play off each other and feel comfortable together. Like, what's the secret sauce there? Is there one?
So I don't know if it's like the secret sauce, but something I ask myself is like, if I feel myself getting frustrated or like angry or whatever, which does not happen very often, but I ask myself, like, is this serving me? Mm-hmm. And majority of the time, the answer is no. Right. And once you say no, your mind changes to a place of like, okay, I'm going to recognize what the individual said. I'm going to take that in and then give a proper response. And so that's why I think like using that with your marriage business relationship or just your regular business partnership is huge, because like when I don't ask myself, is this serving me? I automatically will get defensive. And I also know that that's not serving me. Right. So I think it's like really like taking a step to be there in the moment, because you can't change what has already been said, and you can kind of control what you do say in the future. And it's just taking that like 5-10 seconds to like recognize what was just said and how you react to it, because you have control of how you react. And I think that's the biggest part of like what works out really well for us.
Absolutely. And another thing is, the secret is dancing.
Oh yeah, we dance a lot.
So whenever we become like overwhelmed or like super stressed out or something, something's going wrong, got a bad email or whatever, which is rare, but when it happens, we look at each other and either, one of us is really upset about something and the other one is just, we'll start dancing.
Yeah.
And we do like a little dance around
Like
the house,
yeah.
just a little jig. And then, it might take 5, 10, 30 seconds for the other person to start laughing. And then we start dancing together and then we do like a little dance, whatever. So that's a secret right there.
Hey, that's powerful stuff. Honestly, like that's like really like literally physically changing the vibe from, being in reaction to, like you say, a bad email or a tough conversation or bad news and, one way or another, and shifting the vibration just because you can, just by dancing, and having that in your world as a check to to reactivity in general, and just kind of being in a negative spot, which we all get into, right? That's awesome, guys. That's so cool. that's so, what a gift that you guys have that with each other. That's
so
fun.
You should try it with your business partner next time.
Yeah.
I definitely will. He's in the other room probably listening to this, so he's getting ready to do some dancing, I guess. We'll see. But so big congratulations are in order. One of the exciting things about having you guys on today is to get to talk about deal number one, which is the biggest deal that in anybody's career ever. Michael Blanc talks about the law of the first deal and why it's so important to get that first deal done, and how things get much easier and much more fluid as after the first deal gets done. And so that first hump, it's kind of like a commercial airliner taking off. It uses whatever 75% or whatever of its fuel upon liftoff, and that initial thrust to get to elevation and to get to the right vertical footage above sea level, and then it cruises from there and then can kind of land and not use a whole lot of fuel from that point forward. It's like the first deal. You're going to use it. It's going to feel like not 75 or 80% of what you got. It's going to feel like 110% of what you got to get the first deal done. I know, because we've done our first deal and we're working on a couple of bigger deals than we've ever done before. And so there's a lot to it, and it does feel like a pretty mammoth lift, especially the first time you do it. So I'm really excited to dig into hearing about this deal that you guys did in Tulsa. Tell us a little bit about it. Remind me of the name of the property and kind of walk us through it.
Yeah, it's the name of the property is Harpers Lodge. It's in Tulsa, Oklahoma, 88 units, B- asset with the improvements, and in a C+ area. So yeah, we're real excited. We were following this deal for several months because it initially came on the market and it wasn't stabilized, and I wasn't interested at the time. Because it wasn't stabilized, I was looking for a stabilized deal for our first deal, to reduce the risk, and with the current economic, the pending economic whatever, however long the Congress props up this corpse of the economy. Not sure how long it's gonna be, but I won't get into economics right now.
Right.
But with that being said, like we wanted to make sure that we were able to secure like a long-term debt, right, at low interest. And so, being able to do that, we needed a stabilized deal so we can get agency debt on it. So that was kind of our plan going in. So like I said, we were watching the deal for a couple months. It wasn't stabilized when we first looked at it, even though we walked the property. We liked the asset when we walked it. However, because it wasn't stabilized at the time, I wasn't that interested in it. So I stayed in touch with the broker, and then he continued to send me updates. And I think, September financials came in. It was the first month that it was stabilized. October financials, the preliminary October financials came in, and it was stabilized. It was trending up. The occupancy was increasing. So I was like, oh, perfect. This is a time to get it now, right? So immediately after I saw that, did some adjustments to the underwriting, make sure it still worked, and everything still looked great. And we submitted an LOI at that point.
Mm-hmm. So you ended up getting it essentially stabilized at the end of the day?
Absolutely. Yeah. So it actually trended all the way up to like 100% occupancy at the time of closing.
Mm-hmm.
So, yeah.
Cool. And then is there any, and then remind me of the timing of this. This has been in the last, like 90, 120 days, right? That you guys picked this up?
Exactly. So it was in October of 2020 that we submitted the LOI. I think we've actually got to sign, going back and forth with the LOIs, how long they take, 3 to 4 weeks, whatever, sometimes. And then the PSA after that's in there 3 to 4 weeks. And then with the holidays, so Thanksgiving and stuff like that in there.
Yeah.
And we ended up, I think, actually signing the contract like December 6th or something like that. And then we ended up closing February 23rd. So yeah,
that's a pretty
2021. So
that's a pretty quick close, guys. That's less than 90 days. Am I doing my math right on that?
It was less than 90. I think it was I think it ended up being like 70 days or something like that. 75 days maybe. Yeah.
That's impressive. So you had a capital raise to do as part of getting this done. This, in addition to due diligence and from physical due diligence, inspections to forensic kind of administrative due diligence, for lack of a better word, right? Lease reviews and rent roll review, that sort of thing, reviewing bank statements, tax returns, et cetera. You're doing all that stuff. And by the way, you're how many time zones away for the most part pulling all this off, right?
Yeah.
Like, right. So
exactly.
So quick diversion here. How'd you guys do that? Like, do you have some partners there in Tulsa that are part of the deal? How did you pull that off exactly?
Yeah, so we do. We have one partner who is in Oklahoma City. So he did all of the, I guess, like in-person due diligence. We had another partner who also came in and he helped with that, although he's not in the area. And he also helped with like capital raise and some of the like beginner due diligence, or not beginner, beginning due diligence. But then also we had like on the team, we had a mentor. He was an organic mentor, but his assets are in Tulsa. So he knew the area very well and like the numbers very well. And he was familiar with the property. So that definitely helped us a lot, right? So like the three of them together being there, like just going through the asset in itself, like doing the walkthrough, was the biggest, I think, one of the biggest keys that we definitely needed from being all the way over here.
Mm-hmm. And another thing too, because you talked about the time zone thing. And so, we're 6 hours ahead of Central Time. Mm-hmm. And so when I get home from work, Suzy's done with work, it's, 5, 6 o'clock here. That's 11 or noon, at Central Time. So we still have the entire half of the day, if not more, to work. We can work up until 6 Central, which is midnight here, basically.
Yeah.
Or even later when necessary, especially when it comes to closing, right? So I was up to 1, 2, 3 o'clock in the morning, making sure all the documents, all the I's are dotted and the T's are crossed and all the documents and things like that. And that was a tough, that was a challenge for sure, staying up that late. But yeah, so I think we've been able to really take advantage of the time differences because of it. So.
Yeah, a couple things to like unpack there or highlight, I think, for the listeners. That one of the biggest ones for me, from about 2 minutes ago, if you go back, is Michael and Suzy brought on a mentor that is an expert in the market that they're investing in, that has previously invested there, to be part of the general partnership. That's huge. Like, you guys did yourself a huge favor by doing that. I'm sure it made everything else easier, from the loan to capital raising to just your own sanity and your own level of confidence about the deal, I would think.
Absolutely. And I think the biggest thing for me was, having somebody looking over my numbers and knowing that they were correct for that sub-market, even, not the market, but even that specific sub-market, knowing that specific area, like that gave me so much comfort and so much confidence, like going forward, like with our investors. Right. So, and being able to then, pass through that confidence onto the investors, like, because I had a mentor there, holding my hand and guiding me through the way. So.
Yeah, that's powerful. We talk about the power of mentorship all the time on the podcast, and the power of teamwork. And this is like a great combination of both of those concepts. This is such a team sport. Multifamily investing is such a team sport. You guys did it right. You got your first deal under contract. You went out and got the team that you needed to get it done. You put the pieces in place and got the deal closed. And now, boom, you own a 88 unit apartment building, and you're moving on to the next one, I would think, at this point, right?
That's right. Yep.
Cool.
So we've got some offers out, and just waiting. So yeah.
Okay. Yeah. We'll talk about next steps in a little bit. I definitely want to hear more about your thoughts around that. But the other thing I want to highlight is that, you guys were able to, because of the savviness of bringing in the mentor and your other partner, and shoring up capital raising and your other needs, you've been able to leverage all of that in such an amazing way that you're able to do it virtually from from 6 time zones away. And it is nice how well that lines up, by the way, as far as, having time after your, I'm assuming it's W-2 sort of arrangement, right?
Yeah.
Your W-2 job. Yeah. So yeah, that's super exciting. And then the other thing to highlight is taking advantage of the circumstances around COVID, right? Like, I know some really big syndicators that as soon as COVID hit in late February, early March of 2020, we're not underwriting anything the rest of 2020. We're telling our investors we're capitalizing up on our current assets, right? Like, they went into run and duck and hide mode, and that's okay. Like, there's nothing wrong with that. And nobody knew what was going to happen. So of course their guess could have been as good as anybody's.
Yeah.
But you guys kept your feet moving. Not only did you keep your feet moving, but you really dug in and got, heavily networked up. And Michael, you went to work on investor relation, or on acquisitions rather, and broker relations and deal flow and that sort of thing. And Suzy, you went to work on investor relations and raising capital and that side of stuff. And both of you dug in together on building the relationships that you built and putting all of those resources in place. And you did it by, if this whole COVID thing hadn't happened and we hadn't gone to this Zoom existence, right, where all of us, all of a sudden, like, a Zoom meeting is like as common as a phone call or even more so, that the opportunity might not have been there, because before COVID, things were still like in-person meetup groups and in-person conferences were still very much where things happened, right? And and that's not really the case anymore.
Yeah, I was even to add to that, like, a lot of people didn't even use Zoom, right? So like, if we had to have come into the space and been like, hey, do you want to jump on a Zoom call? Like, oh, why do you have to do that? Oh, well, we live in the UK. It'd be like, oh, red flag. Nope. Why is this person wanting me to get on Zoom from a different country? And so it's been great that everything has gone online. And what else has been great about it is that people now realize how much time they save by doing stuff online and not having all of those in-person meetings in one day, right? Because like some people before could have had like 2 or 3 in-person meetings in one day, and I feel like that's pushing it. Now you can have like 8. Like you can just get through people so much faster. So I definitely think virtual is here to stay. Like for a while, I wasn't sure because I was hearing people say that they had Zoom fatigue or they were just hoping in-person events will happen. But I always think that there will be a hybrid. You know, I mean, even when my company talks about like, we will never be back in the office 100%, like if huge billion-dollar companies are thinking that way, I'm going to have to assume that like the rest of the spaces in this world are also thinking that way.
Yeah, there's a lot of real estate conferences this year. They've already announced that they're going to have a hybrid, you know, like have an in-person, but also a virtual aspect of it as well.
Yeah. And pulling off something like that is going to be a trick and an art unto itself. Like, you know, having an in-person networking event translate well to a online networking event and have that work together will be, you know, that's not an easy thing to do. I've been a part of running meetup groups and some RIA meetings where they've been both in person and online, and it's not super easy. But that said, I think you're absolutely right, Suzy. I think it's here to stay. And I think that there will, if anything, I think that organizations will defer to online for all the, or you know, for all the reasons, right? The ability to record the meetings easily, the mobility, obviously, where you can meet from anywhere in the world with as many people as you need to. And it's hard to see. I see like my monthly meetup groups going back to in-person meetings, the RIA meetings that I'm a part of, the Real Estate Investor Association meetings, some of those. But yeah, and in the meantime, not only have a lot of the existing meetups gone virtual, our Salt Lake City meetup group is virtual, but you've had new ones pop up that have only ever been virtual, right? And those can be really well attended, and you can really find high level groups that have heavy hitters in them that are getting deals done and really know what they're doing, and know who, if they don't know the answers to what you need, they probably know the person that you need to talk to, kind of thing. And so, yeah. Are you guys a part of any masterminds at all? I've never asked you that before.
I am. We are. So yeah. I'm in a veterans like real estate mastermind, and then we're also.
Yeah, we're part of like Hunter Thompson's Raise Masters mastermind. But like from the very beginning, because we pretty much went from 0 to 100 and like put it on our jetpack and went, we actually didn't even know masterminds were like a thing until quite a few months in. And so by that time it was like, okay, well, we have a lot of the education part that we need. Like, is it worth like paying to be part of the community, I guess? But then once we found out that what we needed to do was really like get on those calls every week, right? Because that's still what you have to do with the 506B. It doesn't matter like if you're in a huge mastermind group or not, because if you don't know the person, then I don't necessarily think it matters. But so like getting on those 20 to 25 calls a week, like for months, was like the biggest thing that helped us. And I mean, now we're very like thankful to have found a mastermind. I mean, especially Hunter Thompson's that like is specifically on capital raising, right? Because like that's somewhere that we definitely want to grow and thrive.
Yeah, makes doing deals a lot easier when you're a good capital raiser, for sure.
Well, and you like just touch the lives of so many more people. So I was thinking about this yesterday, and like if I would have known about passive investing like years ago, you know, like my attitude towards life would have been so much more different. And so like as a capital raiser, being able to explain the power of passive income, I just think like there is no cap to it, like because it just brings so much value. It doesn't matter where you are in your life, right? Like passive income will always be there to help you. It will never hurt you. And so now like understanding the true power, I just think it like makes capital raising so much more fun because there's just like this constant education and like passion to get out there and tell everybody about it. Like, who doesn't know about it? I mean, yes, there are quite a few people who do, but there is still also a whole world that does not.
Mm-hmm.
I had a guest say that it was his moral imperative to educate people about this opportunity, and I couldn't agree more. Like it is that it's such an amazing investment vehicle, multifamily investing, syndication investing with a group in these larger scale multifamily assets. There are so many amazing attributes and pluses and pros to doing so, and of course there's risks and cons to any investment and downside opportunity as well. But the when you put in passive cash flow along with targeted appreciation, along with depreciation and cost segregation, bonus like accelerated depreciation, and et cetera, et cetera. The way that risk really is mitigated in a lot of ways in multifamily investment, certainly volatility is mitigated when you're investing in apartments compared to other asset classes. So we could go into that conversation. I know all of us love the qualities of apartment building investing in particular. That's why we're here. So back to Harpers Lodge for a sec, and then we'll talk about kind of what you guys are doing moving forward. So you have a stabilized asset, pretty much fully occupied at this point. What's the business plan there?
Yeah, great question. So the business plan was, we took a different approach to it. I think there were still probably, there's 23 units that need to be renovated of the 88. So, not a large amount. However, the one thing that we noticed was that the 2 bedrooms had like washer and dryer connections. However, a lot of the residents didn't actually have washer and dryers in there. And so we were going to, put in washer and dryers and lease those back. In addition to that, the biggest part of our business plan is actually adding washer and dryer connections to the 1 bedrooms, which is 48 of the 88 units. So the majority of the units are this 1 bedroom. And so what we plan on doing is adding connections and adding the stackable washer and dryers in there. And we're about 6 weeks, I guess now, 6 or 7 weeks in. So last week we actually got our first renovation completed, and we actually have it leased at the performer rents. So 6 weeks after closing, we have the first one leased at performer rents. We're really excited about that. And so, yeah, with that, there's also other income targets that we're trying to hit. They started a flat rate bill back for water, sewer, trash, pest control, things like that. And so we're going to continue that to add additional income to the property as well. And then there's just some other things too, like just improving some things around the property, just going to make it really stand out. So,
is your plan to hold on to it for 3-year, 5-year?
Indefinite? So it's a 5 to 7 year business plan. Okay. The debt. So going back to the debt that we got on the property, remember I said we would stabilize property so we can get long-term debt.
Yeah.
We actually ended up getting a hybrid loan from Freddie Mac, and the hybrid means that it's 5 years fixed at a fixed rate, and then 15 years floating after that. So it's a 20-year loan, right? With there's a cap on the rate and everything like that in the floating period. I won't get into all the details, but at 5 years, if we need to hold the asset for 6, 7, 8, 9 years, we can. To ensure that we protect our investors' capital, number one, and number two, that we time the market right. So
that's smart, super smart. Okay, cool. So moving forward, if you guys could like wave the magic wand and poof, a great deal that has your name written all over it appears in front of you, what does it look like right now?
So perfect deal for us right now, like with our abilities and our team, I think somewhere around 125 units is like great. Because of the, at like 125 units, I think you're like maximizing the on-site manager and on-site maintenance personnel, right? So at 88 units, we have on-site manager and maintenance. However, the income still supports it. However, we would have those same exact people and pay the same exact payroll for them, even if it was 125 units, right? So,
sure.
economies of scale there. So anything above 100 units, we're kind of looking at right now. Obviously, you know, we'd be looking to co-sponsor some deals that are larger, like 200 plus, 300 plus units, which would be awesome because we have our capital raising leg kind of stood up right now. So we're excited to, you know, leverage that later on this year as well. So
that's exciting. That's exciting. All right, great. So next question, looking forward, let's say we're a year out looking back, and it's been an awesome year for you guys. What did you get done? Is it that one deal? Is it a couple of those? Do you have a yearly kind of goal or a 12-month goal?
Yeah, so it would be that we like successfully raised $5 million on our own, especially from over here and doing everything virtual. I think that would be pretty great. But then in addition to like what we just closed on, we want to close on 3 more properties. And then even like beyond that, I was kind of doing the calculations earlier, is that I want to be able to at least like touch the lives in a positive way of about 150 people, which includes like mentoring the LPs, the GPs, if we're all learning from each other, and the residents, right? Because like that's the whole point of us. Like we want the greatest return on impact, and like the residents are also a part of that. And so I just want to collectively be able to change all of them. And actually, now that I think about even the residents, I might have to make that higher if we're going for 125 units 3 more times. So maybe we'll raise that number to like 500 people whose lives I'd like to touch in a great way.
Yeah. Yeah, that's I mean, again, circling back to where we started with the TEDx talk and discovering your big why. Like, let's just go there. Like, what for that? What is that for you guys at this point moving forward?
Yeah, so it's definitely like serving beyond our 4 walls. So we want to be able to help people who cannot help themselves, but we want to be able to impact like everyone that we can. So like part of Adventurous Real Estate Investors is that we want to also help people check off their bucket list items now and not before retirement. So like Michael words this really well, but like in the US right now, so many people like are working their W-2 where they only have 5 days off a year, and they just hope that they can retire at 65, hopefully 70 or 75. But then that's when they're supposed to live life. Like that in itself does not make any sense. And it's really unfortunate, you know? So like, just like through the power of all of this, we want to be able to help people like be their best selves, because when they're like their greatest version of themselves, they can bring the best impact to the world as well. So it all just comes like full circle.
Well said, Suzy. That's awesome. Well, on that note, guys, I feel like we could do a whole episode just on, I'd love to talk to you more about your capital raising and how you've really skinned that cat, so to speak. And because there's a lot of ways to do that, but we'll have to do that on another episode or over a beer or something sometime in the Oklahoma area, maybe. So yeah, and there's no secret around here that our team looks in Oklahoma City and Tulsa as well. So we have some alignment of interests, and we've talked, full disclosure to listeners, we've talked about in the past about different partnership potential opportunities and that sort of thing. So that's super fun. And what I've been wondering the whole episode, I've been meaning to ask you guys, how did you pick Tulsa and Oklahoma City in particular?
So we knew we needed a strong cash flowing market. And then, you know, we also knew we needed a boots on the ground. And surprisingly enough, like one of my old classmates from the academy ended up being our boots on the ground in Oklahoma City. He just got out of the Air Force and he was doing, you know, real estate full time at that point. So we linked up. He's looking to get into multifamily, and we linked up and it just worked out. And now we're super happy. You know, now that we've done even more research on Tulsa, since we've started actively investing there, like we're even more excited about and very bullish on Tulsa and all the great things happening there. And in Oklahoma City as well. And it's just not a lot of competition there. I don't want to say this on your podcast actually, but there's plenty of competition there. Stay away.
Right. Price per door is through the roof. 3 caps.
Exactly. 2.5 caps. and
Good.
only buy on the upside.
No, that's
But,
great. Well,
Yeah,
great
solid
minds
capital.
great minds think alike. I like to think we see a lot of the same things there, and I'm really excited for you guys. Really enjoyed this time getting to hang out and jam with you a little bit and get to know you a little bit more. Really excited to see where things go for you. You guys did this first one right. I got the a front row view of the whole thing. I got your emails and your offering memorandums and all your marketing materials, and you really did a great job. And I'm learning a lot from you guys as you go. And so keep up the good work, and let's do this again in a year and circle back and see how things have gone.
Sounds great, Tate. Thank you so much.
Celebrate the big successes.
Right?
So yeah,
That was
that's
great.
awesome. But high fives to you guys for this one. Like that's so exciting. And I think we'll probably all look back and go, yeah, that first one was the big one that really needed to happen, for
Absolutely.
everything else to happen. Right.
Absolutely.
So Michael and Suzy, you guys have a downloadable free checklist, right? That to offer investors.
That's right, Tate. So actually, through our last acquisition, what we did was thoroughly write down everything from pre-LOI all the way through closing and takeover. And we basically distilled all that down into a checklist of 215 items. I know it's very daunting, but very thorough checklist for any active investors out there. And you can download that for free if you head over to adventurousrei.com/checklist.
Cool. adventurousrei.com/checklist.
That's right.
So everybody, and that's the best place for people to reach out to you as well.
That is, yeah, you'll be able to find us there.
All right. Perfect. All right, guys. Well, thanks so much again. Really enjoyed it. Listeners, thank you for being a part of this one. It was a good one. Hope you enjoyed it and got a lot of value out of it. And we'll see you on the next episode next week. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.